From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
It's Friday, June 25th, and you're listening to the Macrocast. Hey guys, I don't even feel like making like the Infrastructure Week punchline joke because it's really worn, but we actually are in the depths of it'll be a long running Infrastructure Week. It's going to take us probably from this week until into the fall. But I think what the signal I
guess that's an important question. So we had a press conference yesterday, but what did it mean?
We had a couple of press conferences yesterday. Yeah. We had a big one we had a big bipartisan rollout press conference with President Biden and a group of Republican and Democratic senators working on the bipartisan bill, the long sought after bipartisan bill that would win some kind of presidential approval. And it was rolled out, and it looked like, one of the first, kumbaya moments in Washington in a very, very long time. And on an issue that, there's been a lot of separate bipartisan support for a very long time. So it seemed like we got there. We got the holy grail of a bipartisan infrastructure deal. Can argue over the size and money, whether it alone would be successful, but you got that, as President Biden said, we've got a deal. And so that was a good sign. And then you find out, in the hours following that, you've got a deal, but you also have this other deal that involves the pieces that were left out of the hard infrastructure bill, the sort of the caring economy and climate related issues were not in that deal, and the contingency, the small print on the bipartisan deal is that you got to be able to get those other elements in the reconciliation bill, and that may still be the way this thing ends up. But no one really knows. And let's be clear, the Senate's going away for the next 2 weeks for 4th of July break. In those next 2 weeks, they're going to be actually writing the legislative language on this. And so there'll be lots more toing and froing just on the bipartisan bill piece of it. And then lots of drama around process and what gets included in the reconciliation bill, and then how those things do or do not go together. John, how do you read it?
Yeah, it's as you said, the kumbaya moment. It's encouraging, just on its face. The ability for the two sides of the aisle to get together and the convening power of the West Wing, even if, as you say, the sort of narrow path forward begins to get so narrow that they default to a reconciliation, a Democrats only reconciliation approach. This is still a positive thing. It shows that for infrastructure, very importantly, a multi-year, a decade-long kind of infrastructure campaign really has support from both sides. So importantly, it can survive presidential cycles, and that is really essential. Having buy-in from all different parts of the political spectrum, and a recognition that this is a generational challenge to rebuild the country and refurbish our infrastructure to support productivity and to improve people's lives. That is, I think, in and of itself, a very positive thing, particularly in this atmosphere. It's also the second bipartisan breakthrough in 2 weeks. We had the Bipartisan Innovation and Competitiveness Act, which passed the Senate last week, and again, it has to go to the House, so there's still miles to go on it. But despite this is an overarching theme that we've been advising our clients on for months now, which is despite the massive differences in the Trump administration and Biden administration and the Democrats and Republicans in general in terms of their worldview and ethos, and that divide is as big as ever. There are surprisingly many and important areas of continuity between the Trump administration and the Biden administration. And that provides a blueprint for going forward and reconstructing a sense of bipartisanship. So from where we sit, it's a good thing. The market response has been positive. All the ETFs for infrastructure and Caterpillar stock popped yesterday after they'd been sliding for a couple of weeks as the momentum appeared to be getting a little bit, leaking away a little bit for the process. So it created an upbeat tone in the markets, an upbeat tone in Washington, D.C. And we think that, even if you end up defaulting to that reconciliation, this is still a very constructive sign.
You upbeat? Are you as upbeat about it, Brendan? John's very upbeat.
Yes. I mean, we've got a ways to go, and I'm sure it's going to fall apart 27 times. But it's kind of, I look at it kind of the way that I looked at the Trump tax cuts. A lot of people were suspect that they could do it. And I kind of thought, well, they want to do it. So we'll find a way to do it.
Yeah. They got it.
So I feel like we're going to find a way to do this.
It's a gotta have. They gotta have it. 100% must do, gotta have, and in a way that is helpful in the midterms. This is something that is, has to be coordinated with a public relations campaign. And certainly there's the prospect of the difficulty of this reconciliation bill and getting that through. Even centrist Senator Manchin came out yesterday and said that a reconciliation was pretty much inevitable. And, whether it has absolutely everything that the White House wants and that the liberal wing of the Democratic Party want, unlikely to have everything. But, certainly getting some of those revenue raisers that were in the initial plan in that reconciliation bill, some of the other carrying economy stuff. And then the rest of it, the American Families Plan is still out there. And some of the rest of it can kind of default and roll into that. Our expectation, and this is something I think we share with some of your great analysts, Tony at Hamilton Place Strategies, we think that that's something that remains, legislatively a prospect and something that Democrats can run on in 2022 and say, hey, look, we've got this great plan, and if you elect us, this is what you're going to get.
I agree. Here's the way I see it. I think. There is going to be a great deal of negotiation as we go forward on this, and the reason is that Manchin and Sinema, while even as Manchin has accepted that there is going to be a reconciliation bill and some things are going to be in the reconciliation bill, exactly what gets in the reconciliation bill, including the pay-fors. Some of the corporate taxes that they don't like, that Sinema doesn't like, and some of the other spending pieces that are going to get put in the reconciliation bill. The bipartisan infrastructure bill is absolutely necessary for both sides, right? Like there is, Republicans actually get a chance to say, here's where everybody gets to be a winner. Right, Republicans get to say, "See, we're reasonable and we're happy to work on things where they make sense and they're well constructed and reasonable. And of course, we can do bipartisan cooperation. That's why we forced bipartisan cooperation on this real infrastructure bill that Republicans led on. And we forced them to do it, and we did it in a fiscally responsible way." And then they went, Democrats did this Democratic only bill that they, filled up with all this, this slush fund of social spending in this other bill that we refused to go along with, and so we were fiscally responsible and we did things that are real that you care about. And they did this, fiscally irresponsible thing, wasteful spending, social spending, and they did it all on a party line vote. So there's the Republican. Democrats get to say, we delivered everything we told you we were going to do. We wanted this infrastructure, we wanted climate, we wanted this human capital spending to make the economy better and more productive in the future. And then they get to go run on that thing. everybody loses if this whole process falls apart, right?
Yeah.
Democrats could say might end up getting, nothing. Republicans look like they go back to the, obstructionist Republicans, party of no, breaking down the system. We don't, do you want more of, is that what you're looking for? Just nothing good for the country, just breaking things down. So this is really is a win. And Manchin and Sinema get to be winners also, sit at the fulcrum of this, and they are the key that unlocks. And they could say, this is the bipartisan bill that we can accept. This is the reconciliation bill that we can accept. We want to be able, even as Democrats, you think like Republicans want to go out and campaign on bipartisanship. We are in conservative states. We need to go campaign on bipartisanship as well. And so it's important for, Manchin and Sinema to be seen as bipartisan. So they get that win that they share with Republicans, and they get to get, the progressive left off their backs by allowing the reconciliation bill to go forward as well, too. So that's having your cake and eat it too, but that's the position they're in. And if you're a Democrat running in a red state, that's the challenge that you have, in the same way that Collins and some moderate Republicans have had over the years when they're sitting in more moderate states.
I'm honestly more worried that the House is the one that screws it up than the Senate is. I don't think it gets screwed up, but I feel like we don't talk enough about the House.
Yeah, it can. I think Pelosi laid out the parameters pretty well yesterday, though. She said she's going to she's going to do one dance, and that dance is a two-step.
Yeah.
And the two-step is the Senate has to pass both bills. So if she sees the Senate, dance the two-step, then she'll dance, and she'll be a good dance partner. And I think that's the only way. Biden said the same thing. So everyone's kind of locked in now. Now, what I think you're going to see is just the negotiating over the pieces. Whenever you're negotiating in public, you need hard-fought wins.
Yeah.
You're also going to need to have hard-fought losses, right? There may be things that you're going to lose on, but you cannot lose on them easily, right? You have to lose on them hard. You have to fight to the end on them, even if you know what the inevitable outcome is on whatever the issue is. Is it taxes? Is it some extra spending in, some of the climate stuff? Are there policy pieces in there that belong? Like there may be, remember, you have bird rule constraints in reconciliation bill. So that means that some things fit in reconciliation and some things don't. So there's going to be an interest in getting some of the things that are not bird rule compliant that you thought you could get reconciliation and push them over into this other vehicle, which presumably is going to have sufficient support to get 60 votes. And so you don't have to worry about bird rules. So that's all.
The parliamentarian seems to be a little more of a stickler than I think they thought she was.
It's good. You either have the rule or you don't.
I agree.
The rules have to mean what they mean, and you can't just they can't be so malleable. Otherwise, just toss it around.
Just from a last point on this, the legislative prospects here look better, and it's going to be, as you say, some sausage making in public on Capitol Hill over the rest of the summer. But once assuming something is finally approved, and we'll talk about this in future shows, there'll be a lot of opportunity to do so. But translating that bill into execution, how to get the real projects on the ground going. And that is something that has been very imperfectly achieved in the past. We've had big infrastructure bills and approaches. It hasn't transformed the country's infrastructure in a really, in a really fundamental way. Mm-hmm. We still have the deficits and a lot of the problems. It's a question of the institutional apparatus, the way that money is deployed, the way that the federal government interacts with state governments. It's an enormously complex, and then not to leave out the approvals process, which is torturous in the U.S. We've got some very interesting, potential guests and speakers on this topic going forward.
We can't wait for that. Can't wait to have people, come in and talk about actual infrastructure. And then again, remember, this is the Macrocast, what the macroeconomic impact of it. Speaking of which is, I think we're talking about $579 billion. I don't think we gave the number. So $579 billion in this deal over 5 years. I think it could be $1.2 trillion over 8 years or so in the bipartisan package. It's significant. It's not, over that time period, as a share of GDP, it doesn't sound really big, even at those numbers, 1.2 trillion, I think over the next 8 years, I don't know, how much are we going to spend? This is it's a huge economy. So as a share of GDP, it's not huge, but it could have, pretty big long-term impacts.
Yeah. And the knock-on effects as well. And that's just the public spending alone. There is certainly a prospect for private money to come into this in a more aggressive way than in the past. That's going to take leadership. And that's something that, again, we'll explore as we go forward. But the potential for private investment to be a real magnifier on some of these as the public money primes the pump, so to speak.
That's a great point. Yeah. Hey, let's take a break and come back and let's talk about Jay Powell on the Hill. You're listening to the Macrocast.
Markets Policy Partners provides sophisticated financial market analysis that is independent, accessible, and actionable for a broad audience. Learn more at marketspolicy.com. or visit them on Twitter @MarketsPolicy.
All right, we're back on the Macrocast. So, Jay Powell was, Jay Powell was out this week. There's a lot of Fed talk this week and a lot of, interpretation of, just how dovish he is or is not on the outlook for inflation. We're going to be talking about inflation quite a bit. Because we're living in this test of the expectations of the Fed and others that inflation is transitory, and I think we all believe it. Inflation is transitory. Lots of really good reasons for it, and critics are going to do their thing and use it for political reasons. But there's still a lot of trying to fine tune where how transitory and whether the Fed can be baited into action earlier than expected. And he seemed to do a pretty good job of trying to round out the thinking on that this week, didn't he?
Yeah, absolutely agree. He has been extremely consistent, very clear, data-driven. In his press conference that accompanied the decision last week, he was pulling out specific components of the CPI and PCE numbers that are distortions, things that Brendan's been flagging, used car prices soaring, that sort of stuff that is very likely to play through. And he conceded that inflation pressures were higher than their previous estimates, but that certainly hasn't broken his commitment to this transitory thesis. And that is where the majority of the committee really seems to be. When you look at the Fed's forecasts, a lot of headlines came out last week around the meeting with the big jump in inflation forecasts for 2020 from 2.4 to 3.4, gasp. But 2022 and 2023, the estimates stayed like flat as a pancake at like 2.1.
Yeah. And really the update to this year was more math. It was saying what has already happened rather than trying to predict it.
Yeah, we got a key inflation number this morning too, and it's a big headline number.
What was it? I didn't see it, John. What do we?
So headline is now up to 3.9%, but on a month over month it was only 0.4, and now core is up to 3.4% year over year, and it was up 0.5%. But the market was expecting 0.6. So this is the first time that inflation missed to the downside in the last 5-6 months.
And this is core PCE, which is the Fed's pet indicator of inflation. So this is coming as market.
Yeah. And actually, so the Council of Advisors, the Economic Advisors, the White House, sent out a tweet saying that it's up to 3.4, but when you adjust it for base effects, it would have been 2.4. So I don't know that necessarily the Fed is going off those numbers, but that's what the White House is.
And when you look at the markets, the key market-based gauges of long-run inflation expectations, the 5 and 10-year tips break-evens, those are well off their mid-May highs. And so the mid-May highs for the 5-year were 2.82%. That is, this morning it was 2.47%. And, 2.5 is kind of a level that, and when you look at the 10, it's even more, it's a little tamer even. And the 10-year topped out at 2.58%. It is now 2.32%. The Fed has said, with their average inflation targeting, if you get up above 2%, for a period of time, that's not that scary to them. And so the markets are basically aligned. But we did see speakers this week, the minutes of the meeting that came out that sort of outed the committee as talking about as beginning to split along some of the hawkish and dovish lines that seemed to blur substantially during the pandemic, during the real crisis era. Now that we're coming out the other side of it, some of the more hawkish members are getting their feathers and beaks and talons sharpened up a little bit here. And we have seen, for instance, St. Louis Fed President Bullard coming out and not refuting the transitory, but focusing on the potential for these pressures to be more persistent over time. And that is shared by Dallas Fed President Kaplan and some of the others that have come out this week. And Atlanta Fed President Bostic came out and put his hand in the air and said, I'm self-admitted on the hawkish side of the dot plot and so forth. So there's a diversity. It's a healthy diversity of opinion on the committee. And it seems like the market has digested this shift over the past couple of weeks and is beginning to really focus on, the taper is the big question, and where the doves versus hawks come out on the question of that timeline is the most immediate policy.
I don't mind. Look, I tend to be right now where Powell is on this, but I thought Kaplan and Bullard's comments, which are not always very constructive, but I thought were pretty constructive this week. I thought it's fun. Like, you want someone testing your thinking on that. And we know that happens at the table. And I don't mind it happening publicly also on this. You want, and I think it's a good signaling to market participants to know that this isn't just a herd. I mean, they are having robust debates and deep debates on just what these things mean. So I thought it was actually really constructive to see, Bullard out this week with those comments, and it's good. You want this thinking tested all along the horizon.
Absolutely. The market wasn't really used to that. The Fed has been totally unified over the crisis period. And so this change and shift in the committee is something that gave the market some pause over the last couple of weeks. But it seems like, the stabilization and people are moving on and getting a sense of how this is going to go forward. Interestingly, also last week when we were talking, when we were going through the Juneteenth episode and Diamond Nia Mack from the Sadie Collective joining us, we talked about how the Fed has an explicitly, equity-driven agenda built into their labor market goals. And this was something that we postulated perhaps might come into play as they refine their guidance on tapering and put more meat on the bones of the substantial further progress. And that's basically what Jay Powell did. Chair Powell in his testimony spoke absolutely explicitly about various groups, ethnic groups, gender groups, looking at a broad-based and inclusive goal for maximum employment, and bringing that to the fore, I think, is something that gives it breathes life into the equity agenda that the Fed is trying to operationalize, and linking that to specific, linking that to their guidance on a specific policy change like tapering really brings it up in the level of importance and visibility.
ECB is struggling with a lot of these questions as well. I mean, there some debate in the ECB about their, how they should think about inflation as well. And they're not seeing the same levels of inflation as or rates of inflation as we're seeing lately, so it's much more subdued
And
there.
they never have. They've always run much lower than we have.
Always, right?
Well, since the Eurozone has been created, yeah.
And pretty considerably, right?
Yeah, almost by a whole percent.
Well, I think
it's just in a very deflationary environment.
Yeah, I think that, distortions aside, you got to look at the headline figures with a grain of salt, but still their headline figure in May CPI was 2%. Ours was 5%.
Yeah. I mean,
and that's a big difference, but still they've got a much more hawkish wing, right? Yeah. The Northern European deflationists,
right?
that's a pejorative, but that's really the way that they've acted. And President Lagarde has, obviously she's got probably a tougher job wrangling her decision-making committee than Chair Powell does, despite the diversity of opinion. They have a lot more in common in their views than the difference.
The French don't have a great history of wrangling the Germans.
Yeah, the Bundesbank. But President Lagarde has not really minced words over the last couple of weeks. I mean, she has basically, some of it's been in public and some of it has been reported in private. Basically, she's characterized the discussion about withdrawal of stimulus as unnecessary, premature, and that's the message that we've gotten from the most recent ECB communiques. She definitely has some strong backers in there. The chief economist Lane came out earlier this week, and he basically echoed what she was saying: unnecessary and premature to talk about tapering of the asset purchase program. There, they've got. Unlike the Fed, they've got a real currency issue to think about, and for them to pivot toward tapering when their vaccine rates are lagging ours, their economy has been better than expected, but the expectations, the reality is still slower of a rebound than in the U.S. and so forth. And they have that great sensitivity to the strength of the euro. The euro has been back on the appreciation trend recently. And so if they actually, if the Bundesbank gets some traction and they start to move the ECB ahead of the Fed, how can they let that happen? And it looks like, our bet is we're going to bet on Lagarde all the way, and to keep the ultra accommodative settings straight through. Who knows what's going to happen in the fall, right? I mean, already, the public health, it's not done. And so getting ahead of some of these things is, patience is a virtue here. It seems.
Absolutely. So I'm heading there in September to Italy. So I'll be doing my part to boost, GDP growth in the euro area.
Italy is such a fascinating. Now, Mario Draghi, just recently approved the budget. They got through the budget. He revealed the budget plan of what to do with the what's the figure? It's the 261 billion euros that he's getting out of the pan-European stimulus package, which is just getting going here and getting approvals. That is a major infusion of capital into the Italian economy. He's got a plan for streamlining the bureaucracy. He's not the first one to have tried it, but this is Mario Draghi we're talking about. The opinion polls, the latest I saw was 65% approval for his programs. This is the one to watch, and as a bellwether for the European project, the post-COVID recovery, and the ability to effectively deploy fiscal stimulus on one hand and reforms on the other. If anybody can do it, it's Super Mario. So it's a really fascinating. It's going to be a really fascinating period. You got to bet on that guy too.
Yeah, I mean, I think that those two, Lagarde and Draghi, one with a Europe-wide remit and Draghi with Italy. They are experienced in a lot of ways, and very smart and talented diplomats. And I would bet on them both as well too. They know what they're doing. We'll see whether it works, right? But I think they're going to get their way, and we'll get to see whether their way is successful or not. But I would bet on them getting their way.
Yeah, and the poles of power are shifting in that direction. They're shifting south. in the EU, and with Angela Merkel leaving the scene. So it's going to be a very interesting time.
Yeah, it is going to be. I mean, she has. I don't think it's going to be overstated just how much of an anchor Merkel has been over the years, and just a very strong, not just a personality, but also very smart, very a skilled politician.
Yeah.
Both within Germany and again in the EU, and they're going to miss that. And it's not obvious that that Germany is going to play that same role. So Merkel is going to be a loss. We'll see who fills that space. Why don't we take a break, come back, and take a quick look at the week ahead. You're listening to the HPS Macrocast.
Check out HPS Insights, a regular podcast from Hamilton Place Strategies, bringing you the latest on policy debates affecting the business and political communities. Available on the HPS podcast channel on your favorite streaming platforms, including Apple, Spotify, and Google. Tune in to the latest episodes and learn more at hamiltonplacestrategies.com/podcast.
All right, we're back on the Macrocast. Brendan, what are we looking at for next week?
So there's a host of data all around the globe, from inflation data to retail sales. But really, the big event of the week will be the jobs report, and this is really a big one because the last two have been kind of disappointing. And if we're going to get back to normal in the summer, June should have been a big time for hiring, but the claims numbers the last couple of weeks have been disappointing to the downside. They've been over 400,000, so it's not necessarily pointing to a massive number. It could be 1 million, but it doesn't look like it's going to be 2-3 million, and that certainly would have ramifications for the Fed and global markets.
Got a big OPEC meeting too. There are rumblings about OPEC releasing more supply, getting a little ahead of their current rollback of the output curbs. Russia is militating for it a little bit here, and oil prices are they're not at eye-watering levels, but at $75 a barrel for Brent crude, that's multi-year high.
Yeah, that's elevated. When was the last time we were at 75, John? Do you know?
2019 maybe.
Yeah.
Yeah. I mean, it's not far off.
We lived with it before, yeah, but it is going north from there. If it does go north,
yeah, the trend is certainly notable. So we'll see what OPEC pulls together. They may not want to increase supply too much before there's clarity on the Iran potential for U.S. a rollback of sanctions on Iran, which would bring back a lot of supply.
Well, I have to be off. I'm not going to be available next Friday, so I'm going to miss. I hate missing Jobs Day, but we're going to have the great Megan Pennington joining us, joining you guys next week for the mother. It's always the mother of all Jobs Days.
Yeah, it's always. Yeah.
This is a particularly big one.
It's always the biggest one since the last one.
Right. Exactly.
This is a big one. Yeah. All right, guys. Have a fantastic weekend. Great Macrocast. I'll see you when I see you.
Perfect.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share.